issue of how can I receive money, how can I receive cash. If I borrow, if I take loan, I will get money, that is an inflow. Then issue of shares, if I issue shares, equity share, preference shares, or if I issue debentures, if I issue debentures, I will receive money because I got a money from shareholder, or if I issue debentures also, ultimately I will receive cash. So majorly the inflow of cash will be, one is cash sales, that is my business, that is my operations. Collection from customers, that is also my business, that is my operations. So I am receiving money. Other income, that is not my major business, that is not my operations. Dividend received is not my operation, that is not my objective of business. I am doing automobile business. Automobile sales is my operational sales. Collection from automobile customer is my operational inflow. Anything other than this, dividend received, interest received, rent received, is not my operational income. It is non-operational income, other income. Okay, that is also income. I received money. Other than that, sale of asset and other things is also a non-operational income. I am receiving income by selling the asset. I am receiving income by selling my investment. But all these things are inflow. Inflow means cash coming inside. Borrowing is a non-operational activity. Still I am receiving cash. Okay, like issue of shares, that is also non-operational activity. Still I am receiving cash. Like this, all these things are related to inflow. All these things are related to inflow. It is like an example. It is like examples. Okay, for an example I am discussing all these items. Like you take outflow. How can, in a business, what are the major outflow? One is expenses, cash sales, like cash expenses, correct? That is my outflow minus. Then cash paid to creditors. I already purchased material in credit. On credit I purchased. Now I am repaying. Cash paid to creditors. Cash expenses, direct cash expenses. Anything related to business. Okay? Anything related to business. Then what is the next one? Cash expenses, cash paid to creditors, then other expenses. Before other expenses you have cash expenses, means all type of expenses, administration, salary, vendor payment, all those expenses. So what about next one? Other expenses. So under the other expenses, what else you have? Interest expenses. Dividend paid, it's not an expenses, it's an appropriation of profit. So interest expenses is an expenses. Okay, other than an operation expenses. What else? Other expenses, other losses, what else I will incur? Cash related expenses, cash related things only we are discussing. All these points are related to cash. Okay, so other interest expenses I will incur. So like this I may incur some other expenses also. What else I will incur? So these are the expenses. Expenses means outflow, cash outflow. Only we are discussing about cash, anything related to cash. What else? There will be an outflow. Payment to lenders, payment of loan, outflow, correct? I borrowed money. Here I borrowed money, I got a money inside. Now I am paying, repaying the borrowings, repaying the loan. So it is a cash outflow. What else? When I will pay? Here you see sale of assets. You see in inflow, sale of assets, investment. If I sell my asset, I will receive money. Then if I purchase the asset, purchase of assets, then I will pay. Then cash will go out of the company, correct? Purchase of assets means without cash, mostly it is not possible. Sometimes without cash also we will purchase, like I will issue shares on behalf of the asset. I will purchase shares by issuing equity shares. Sorry, I will purchase assets by issuing equity shares. 10 lakh worth of assets, how I will purchase? By simply issuing equity shares of 10 lakh worth. So there is no cash transaction here. Other than whatever we discuss is cash related items. Purchase of assets, outflow. I will pay money and I will collect the asset. What else? Payment of dividend. Payment of dividend to equity shareholders. That is also an outflow. That is also an outflow. So like this there are many outflow. Like this there are many outflow. For our understanding purpose, what are the items generally in cash flow statement? What is the meaning of cash flow statement? Cash flow statement means what? Okay, cash flow statement means movement of cash during the year. We have to present in a format. So what are the cash items? That's what we discussed here. Cash sales, all these things are cash item. Then what about non-cash item? What about non-cash item? What about non-cash item generally? Non-cash item. What are the non-cash item? In P&L account, what is the major non-cash item? Major non-cash item. P&L account, expenses or income, what are the major non-cash item? Depreciation. Depreciation is an expenses or not? It is an expenses. It is an operating expenses or not? It is an operating expenses. But whether it is a cash expenses or not a cash expenses? It is not a cash expenses. It is not a cash expenses. Then what about amortization? Amortization of intangible asset. Amortization of intangible asset. Amortization, depreciation, same meaning. Depreciation is for tangible asset. Amortization is for intangible asset. That is also not a cash expenses. But this is also not a cash expenses. What else? What else? Write off. Write off of accumulated losses and expenses. Write off is also not a cash expenses. It is already incurred and it is amortized or write off over during the period. Okay. For example, 10 lakh discount on debentures, 10 lakh rupees. That should be write off over the period of life of the debentures. Life of the debenture is 10 year. Life of the debenture is 10 year. Discount on debenture is 10 lakh. Then 10 lakh divided by 10 equal to 1 lakh. Every year I will write off 1 lakh, 1 lakh, 1 lakh, because that is an expenses that I am writing off in my P&L account. This is also non-cash expenses. This is also non-cash expenses. And also forex loss. Book loss. If it is a book loss, then it is a non-cash expenses. You please remember our AS 11 discussion. What is forex loss, what is book loss, what is actual loss, all those things. So forex loss, book loss also not a cash expenses. Then what about next one? Like this, there are many non-cash items. For example, loss on sale of asset. Loss on sale of asset. This is also non-cash expenses and also non-operating expenses. Okay, loss on sale of assets. This is also non-cash expenses. Then what else? Like this, you have many item, non-cash item that is accounted in P&L account. That is accounted in P&L account. Okay. So these are the items. These are an example. So what we have to do ultimately? Why we are studying this one? What we have to do? Why we are understanding all these things? What we have to do? How to proceed? So for the ultimate objective is we have to prepare cash flow statement. We have to prepare cash flow statement. So the point is we have opening cash balance. We have opening cash balance. Okay, that is opening balance. For example, 10,000. During the year, we had a cash sales 1 lakh, that is inflow. cash sales 1 lakh, then we have borrowings 2 lakh inflow, then we have loans received 3 lakh inflow, then we issued equity shares 1 lakh inflow, then we sold asset, sale on assets 50,000, then we sold investments. All these things are inflow. Inflow means money is coming inside. 50,000, if I sell my investment, money will come inside. So these are my inflow. These are my inflow. My opening cash balance, I have an opening cash balance of 10,000 plus 1, 2, 3, 6, 7, 8 lakhs. 8 lakh is my inflow. What about outflow? Anything. Cash expenses 2 lakh. Cash expenses 2 lakh. Repayment of borrowings. Repayment of my lenders 2 lakhs. Then what else? Interest payment. Interest payment to my borrowers 50,000. Then what else? Purchase of assets. I am buying new assets 1 lakh. Then what else? Payment of dividend. I am paying dividend 50,000. What is the total? 2 plus 2 4, 4.5, 5.5, 6 lakhs is outflow during the year. So opening cash balance, I have previous year balance sheet, I have opening balance is 10,000. So present year I made a cash sales, so it is an inflow 1 lakh. Borrowings, I made a borrowings, so I got a money 2 lakh. I received loans, so I got a 3 lakhs. I issued equity shares, I got 1 lakh. I made sale on asset, I got 50,000. I made sale on investment, I got 50,000. So total inflow is 8 lakh. Then outflow, cash expenses 2 lakh, repayment of borrowings 2 lakhs. It is an outflow. I am spending in cash, so 2 lakh. I am repaying my borrowers 2 lakh rupees. I repaid interest 50,000. I purchased new assets 1 lakh. I paid the dividend to my shareholder 50,000. So total outflow is 6 lakh. Outflow is 6 lakh. Inflow is 8 lakh. Opening balance is 10,000. So 10,000 plus 8 lakh. 8 lakh 10,000 minus 6 lakh. Minus 6 lakh is how much? 2 lakh 10,000. This is my closing cash balance. This is my closing cash balance. This is called cash flow statement. So this is called cash flow statement. This is called general meaning of cash flow statement. Okay. So then what about AS2, accounting standard 2? What about AS2? What about AS2? We know the cash flow statement, but what about AS2? AS2 deals with cash flow statement. Okay. Then what is cash? Cash is like cash in hand, cash at bank. Okay. They are defining cash and in two categories. One is cash and another one is cash equivalent. One is cash and another one is cash equivalent. Cash means cash in hand, cash at bank. Then what about cash equivalent? That is not actually cash, but we have to treat it as a cash. That is not actually cash, but we have to treat it as a cash. What are the items? Anything, any instrument, financial instrument that is readily convertible into cash. That is readily convertible into cash is called cash equivalent. Normally within 3 months, less than or equal to 3 months. Okay. If I am able to convert my instrument into cash within 3 months means then that also we have to treat as a cash. For example, demand deposit. I deposited money in bank. But whenever I ask money, they have to transfer the money to my account. Generally, deposit means what? We have to wait for some time, 6 months, 1 year, 2 year, like that. Demand deposit, like whenever I need money, I can make it as a cash. I can withdraw the cash. Okay, like this there are many instruments available in the market. Which can be convertible into cash any times. Normally, if it is convertible within 3 months, then that is also we have to treat as a cash. Then that is called cash equivalent. Okay, any instrument that is convertible into cash within 3 months, then we can treat that as a cash equivalent. So T-bills, treasury bills issued by Government of India, it is also an instrument, financial instrument. If it is convertible within cash within 3 months means then that is also cash equivalent. You can expect 1 mark or theory. What is cash and cash equivalent? Cash means cash at bank, cash in hand, and also savings account, balance. Cash equivalent, anything convertible into cash within 3 months. Any instrument, any financial instrument is convertible into cash within 3 months, then that is also a cash. Okay, like demand deposit, T-bills, all those things. Okay, so this is as per AS3, this is the explanation. Then what about AS3? As I said, AS3, you have 2 methods. One is presentation of cash flow statement contains 2 methods. One is direct method, another one is indirect method. Okay, one is direct method, another one is indirect method. So indirect method is preferred. Indirect method is recommended, preferred. Examination point of also indirect method only, very important. We will also discuss more about indirect method. Okay, so before getting into the format, you should know a little bit basics. So as per AS2, you have they classified the cash flow into 3 category. One is cash flow from operations, another one is cash flow from investment, another one is cash flow from financing activity. What I am saying? AS2, we have to present the cash flow statement under 3 category. One is cash flow from operation, another one is cash flow from investment, another one is cash flow from financing activity. Okay, so cash flow from operation. What is operation? Operation is nothing but my business. What is my business? Generally, what will happen in business? Sales will happen, purchase will happen, expenses will happen. Correct? That is my operation. Operation means what? Buying, selling, production, manufacture. That is my operation. Ultimately, sales, purchase is my operation. Sales, purchase, expenses related to operations. All these things are cash flow from operations. Correct? Generally operation means this is the thing. Then what about the cash flow from investment? You have to think like an investment activity. Investment means what is investment? General meaning of investment. What in a company, what I will invest? I will invest in my fixed assets. I will invest in investments, shares, debentures I will invest. What else I will invest? So these are the major thing I will invest. One is I will invest in fixed asset, another one is I will invest in shares and debentures. So one is fixed assets I will invest, another one is I will invest in shares and debentures. So if I invest If I invest in if I invest in the shares and debentures, what will happen? If I invest in fixed assets in future, what will happen? One day I have to sell this asset because scrap, scrap value, all those things, correct? Once asset's life is over, we have to sell. So if I sell this asset, I will get money. Sale on fixed assets, that is also part of the investment activity. Sale on fixed assets, I will receive some money, that is also part of the investment activity. Then what else? If I invest in shares and debentures, what will happen? If I invest in shares, what I will get? I will get dividend received. That is also investment activity. Because I am investing and receiving dividend. Then what else? Interest received. When I will receive interest? If I invest in debentures, if I invest in bonds, then I will receive interest. Okay, that is also an investment activity, because I am investing, then only I am getting the return, correct? All these things are investment activity. Then what about the third one? Cash flow from financing activity. What is the meaning of financing? Financing means what? Financing means what? Raising money, borrowing, arranging funds. All these things are related to financing. How can I raise the money? Issue of equity shares or issue of debentures, issue of equity shares or debenture. If I issue equity share, I will receive money. If I issue debenture, I will receive money. Then how can I raise the money? Loans from banks, borrowings from other companies or any other entities. Then I will get money inflow. So then what is the next thing? If I issue equity shares, what I have to do? If I issue debentures, what I have to do? If I issue equity shares, I have to pay dividend. Dividend paid is also financing activity. If I issue debentures, I have to pay interest. That is also financing activity. If I got a loan, I have to pay interest. If I borrowed, I have to pay interest. If I got a loan, if I got a borrowings, I have to pay principal, repayment of principal. That is also financing activity. Okay, so the purpose of this AS2 is we have to present the cash flow statement in three categories. One is cash flow from operation, cash flow from investment, cash flow from financing activity. Okay, before that we discussed what are the cash flow items. Those items we have to present in under this category. If it is an operational, we have to present under operational. If it is an investment activity, we have to present under investment activity. If it is an financing activity, we have to present under the financing activity. Okay, so if it is an operational, present under operational. If it is an investment, present under investment. If it is a financing activity, we have to present under the financing activity. Finally, we have to arrive the closing balance. Opening balance, then this cash flow statement, this plus this plus this. Okay, this plus this plus this, that is operational plus investment plus financing activity plus opening balance equal to closing balance. You got it on what I am saying? You got some cash here, you got some cash in operation, you got some cash in investment, you got some cash in financing. Add all the three, then already you have some opening balance, cash in and opening balance. Add all the three plus opening balance equal to closing balance. Okay, this is the general format I am discussing. There is a format available, I will discuss. But before that format, you should know what is operational, what is financial, what is operation, what is the meaning of operation, what is the meaning of investment, what is the meaning of financing. Because they will give different items in the question. You have to identify which one is what, which one belongs to operation, which one belongs to investment, which one belongs to financing activity. That you have to decide. Okay, so we will understand from the material what is operations, what is financing, all those things. So see here, cash flow from operating activity, cash flow from investment activity, cash flow from financing activity. What is operating activity? Operating activity are the principal revenue producing activity of enterprise and other activities that are not investing and financing. Okay? Operating activities include all transactions that are not defined as an investing or financing. Generally, if it is directly related to my business, then it is an operational activity. Investment activity, as I said, acquisition and disposal of long-term asset and other investment not included in cash equivalent. Cash equivalent means then it is not an investment activity. Cash equivalent means it is part of cash. We should not treat it as an investment activity. Anything realizable within 3 months is cash equivalent generally. Financing activity, we know that it is raising money and we have to pay the dividend and interest wherever applicable. Okay? Cash, then come to the elements of operating cash flow. Description, operating cash flow means what are the items? All these items are operational related item. You please go through yourself. Okay? All these things are like an example. All these things are like an example. Whatever I discussed is given here. Whatever I discussed is majorly given here. Okay? So this is the material format for direct method. As I said, the two method is there. One is direct method, another one is indirect method. Indirect method is important for examination, but we will simply go through direct method also. Okay? Cash flow from operating activity, cash flow from investment activity, cash flow from operating activity, cash flow from investment activity, cash flow from financing activity. Totally 3 activity. So we will discuss first cash flow from operating activity. Operation means directly related to the business. Why we are preparing this one? Anything happened in cash, anything involved in cash directly should be presented. Anything involved in cash should be presented here. That is as a statement. That is called cash flow statement. That is categorized under 3 categories. One is operating, another one is investing, another one is financing. Okay? So what is the first item? First item is cash received from customer. Anything collected from cash, whatever you receive from customer should be presented here. Inflow minus cash paid to supplier and employee. What it or not? Operation simply they are simplifying into category. One is whatever you receive from customer, that is inflow. Whatever you paid to your employees and suppliers, vendor, that is outflow. This minus this equal to net. For example, 10,000 I received, 5,000 I paid means balance 5,000 will be there. Then minus income tax paid for the purpose of operational activity. Income tax paid for operational activity. Then if you minus, I will get the net cash flow from operations before extraordinary item. What is this extraordinary item? What is the meaning of extraordinary item? Extraordinary item means abnormal or non-recurring in nature. And also not directly related to our business. For example, government grants received, government grants paid, refund of government grants. All these things are extraordinary item. Then here they mentioned extraordinary item, disaster settlement, insurance claim, proceeds from disaster settlement. That is an insurance claim they are adding because it is an extraordinary item. So whatever you receive from customer, cash received from customer, whatever you paid to suppliers and employees, minus it. Then income tax paid, minus it. Then whatever the extraordinary item do adjustment, you will get the net cash flow from operating activity. Then your operating activity is over. Then come to investment activity. Investment means you have to think it is morely outflow. I will invest means I will invest in my fixed assets. I will invest in investment. I will invest in shares and debentures. I will invest in bonds. Okay? If I invest in fixed assets, what will happen? One day I will sell that asset, proceeds from sale of fixed assets. Okay? Then if I invest in shares and debentures, what will happen? One, I will receive dividend, I will receive interest income. Okay, like this you have to think. Here how they presented: proceeds from sale of fixed assets including investment. I am selling my investment, I am selling my fixed assets because I already bought it. So this will be presented here. Then during the year, how much I purchase of fixed assets including investment. During the year, how much I spent for my investment and fixed assets. That is an outflow. Inflow minus outflow plus interest received. Why interest received? Why interest received? Because I invested. Because I invested in debenture or something, so I am receiving the interest. Why dividend received? Why dividend received? Because I invested in shares, so I am receiving dividend. So add, this is the income. This minus this, then plus, you will get net cash flow from investing activity. What we are discussing is direct method. Okay. So then what else? Then financing activity, cash flow from financing. What is financing activity? Raising, arranging funds, raising, borrowing money, all these things are financing activity. So first item, proceeds from issue of share capital. I received money by issuing share capital, that is an inflow. Proceeds from long term borrowing. I received money by got the loans. By got the long term borrowings, I received money. So this is inflow minus repayment of principals, repayment of long term borrowings, including redemption of preference shares. I am repaying my borrowings with the principal amount I am repaying, plus also I am repaying the redemption of preference shares. If I issue preferences one day, I have to repay. So that also will come under. It's an outflow. Inflow minus outflow minus interest paid. When I will pay interest? If I borrow, I will pay interest. That is an outflow. Dividend paid. When I will pay dividend? If I issued equity capital, share capital or preferred share capital, I may pay dividend. I may pay dividend. So after doing this adjustment, you will get net cash flow from financing activity. Net cash flow from financing activity. Net increase in cash and cash equivalent, meaning this plus financing activity plus investment activity plus operating activity. Net cash flow from operating activity plus net cash flow from investment activity plus net cash flow from financing activity equal to net increase in cash and cash equivalent. Something will come. With that something plus opening balance, beginning of the period. That is called add cash and cash equivalent at beginning of the period equal to closing balance will come. Okay, that closing balance should tally with your balance sheet figure. You can cross check in examination. Sometimes they will give balance sheet and you can cross check in examination. If it is tallied, then mostly your answer is correct. But the point is, you have to present this item under the particular category, correct category you have to present. Even if you wrongly present, sometimes your workings will tally, your statement will tally, but the answer is wrong. Even though answer is tallied, but still you will not get full marks because you have not presented the items under the correct category. You may present interest paid under operational activity. Interest paid, instead of presenting under financing activity, you may present under operational activity. But your cash flow statement also will get tally, but you will not get the marks because you presented under the wrong heading. You have to present under the right heading. That is very, very important. Presentation is very, very important. Okay. So this is your direct method. Examination point of view, direct method is not very much important. Indirect method is very, very important. Okay. Then what about indirect method? So indirect method, what is the difference between direct method and indirect method? Indirect method, only difference is operating activity. Whether for financing activity, investment activity, both method same answer. Both method same format only we are using. But for only operating activity, there is a difference between direct and indirect method. For only operating activity, there is a difference between direct and indirect method. Then what is the direct method and indirect method? In direct method, what we did actually, just come to the direct method. Simply under the operating activity, we put one figure, cash, whatever you receive from customer, you write here. Whatever you paid to your employees and suppliers, you write here. That is your operations. Then whatever you paid as an income tax, write here. That is also part of your operation. Proceeds from disaster settlement, extraordinary item, that also you write here. Then you will get the operating activity directly. Because you are directly writing the cash item. That is direct method. Because you are directly writing the everything. Directly writing the figure, so that is called direct method. But in case of indirect method, you are not directly writing the figures. You are not going to directly write the figures. You are going to present the format under indirectly. You are going to present the format indirectly. What is that indirect? Indirect means accrual, from accrual to cash you are converting. From accrual method to cash you are converting. What is that accrual method to cash you are converting? What is the first item under the indirect method? Net profit for the period before tax and extraordinary item. What is the meaning? Net profit for the period before tax and extraordinary item. What is the meaning? Whether this net profit is calculated under accrual method or cash method. What is net profit? Where it will be available? In final accounts. In final accounts, P&L account, it is available, net profit will be available. P&L account is prepared under cash basis or accrual basis? Tell me. P&L account is prepared under cash basis or accrual basis? P&L account is prepared based on the accrual basis. What is accrual basis? Anything is occurred or incurred, we have to account it immediately. We should not wait for the cash. Whenever the transaction is occurred or incurred, we have to book the entry. We have to record the transaction immediately into the books of accounts. So what is the impact? This net profit is arrived based on the accrual method. That means in this net profit, cash expenses is also, non-cash expenses is also included, non-cash income is also included. You got it or not? Non-cash income means what? Credit sales. Credit sales also included. Non-cash expenses, depreciation, write-off of expenses, loss on sale of fixed assets, all these non-cash expenses is also included. We have to ignore. We have to simply write the net profit for the period. Then we have to arrive the figures. This net profit is also included financing activity items, investment activity items. How it is included? Because net profit is arrived from where? P&L account. I will show you an example. So just take this P&L as an example. Generally P&L, what are the items you have? What are the items you have? Sales. The sales you have two items, cash sales, credit sales. Then what else you have? Other income. Other income, what are the income you have? Dividend received, interest income, profit on sale of fixed assets. Profit on sale of fixed assets. Okay? Like this you have many other income. Then what about expenses? You have cash operating, you have operating expenses, correct? Operating expenses only you will have, not cash. Okay? So you have depreciation in P&L account. P&L account is prepared based on accrual method. You have interest paid. You have interest paid. Then what else you have? You have interest paid. Then write-off of expenses. Then loss on sale of fixed assets. Loss on sale of fixed assets. Then forex loss. Book loss. Assume it is book loss. Book loss means it is not a cash loss. Then taxation. Then for example refund of government grants. Refund of government grants. So all these items will come. Then finally you will get net profit. Finally you will get net profit XXX. Okay? What they are trying to say under the indirect method? What they are trying to say under the indirect method? What is the opening balance of indirect method? What is the opening balance of indirect method? Opening balance is net profit before tax and extraordinary item. Net profit before tax and extraordinary item. For example, assume your net profit is 10,000 rupees. Net profit is 10,000 rupees. Then government grants, that is an extraordinary item. Government grants, refund of government grants, extraordinary item, 5,000 rupees. Then income tax, 4,000 rupees. Forex book loss, 3,000 rupees. Loss on sale of fixed assets, 2,000 rupees. Write off expenses, 1,000 rupees. Interest paid, 2,000 rupees. Depreciation, 3,000 rupees. Okay? So like this you have many items. Like this you have many items. Net profit before tax and extraordinary item. That is the question, correct? So what is the format? As per the format, just go through. So net profit for the period before tax and extraordinary item. That is the starting point. How can we start then? How can we start then? So as per this format, net profit is how much? Net profit is 10,000. That is after tax or after government grants. After tax and after government grants, how much? 10,000. What is the format actually? As per format, what we have to do? As per format, what we have to do? So what is the first item in the format? Net profit before tax and extraordinary item. That is the thing, right? How can we identify from our P&L account? How can we identify from our P&L account? This is our P&L account. Net profit, finally how much we are getting? 10,000 we are getting. So after reduction of government grants and after reduction of tax only I am getting 10,000. So before tax and extra item, how can I calculate? So 10 plus 5 plus 4. 10 plus 5 plus 4 equal to 19,000. Equal to 19,000. That is called net profit before tax and extra item. This is after tax. This is after tax and extra item. We have to identify before tax and extra item. That is 10,000 plus 4,000 plus 5,000. Net profit before extra item and before tax is just I am adding the figure. Then I will get 19,000 as a revised figure. This is my opening balance. This is my opening balance. Okay. So why we are doing this? This is called indirect method. This is called indirect method. Indirect method means from accrual to cash we are converting, and also we are converting to total to operating. Okay, meaning all the items will be included. We have to eliminate all other items. Okay, we have to eliminate the financing activity, investment activity from P&L account. Then we have to present under the financing activity, investment activity later. Okay, net profit before tax and extraordinary item 19,000 rupees. That is my opening balance. Now you come to the format. So as per the format, what I am adding? Adjustment for non-current and non-operating item charged to P&L account. Adjustment for non-current and non-operating item charged to P&L. What is the meaning? Non-current means what? Adjustment for non-current. Non-current means non-cash. Non-current, it is not only non-current, we have to consider as non-cash. Please read as a non-cash. Adjustment for non-cash and non-operating item. Non-cash. Why we are adding non-cash item? Because depreciation is an expenses or income. Depreciation is an expenses, whether it is a cash expenses or not a non-cash expenses. It is a non-cash expenses. So if I debit my depreciation, what will happen? If I reduce my depreciation, what will happen? My net profit will be reduced. If I add my depreciation, what will happen? My net profit will be increased. Why I am adding this depreciation? Because this is non-cash expenses. Actually, I did not spend anything. So my profit will be increased because this is not on cash expenses. So I am adding. Okay. So I am adding because this is non-cash expenses. So I am adding because I want to know my cash flow statement. Because I want to know the cash, how much I generated from operating activity. My objective is how much cash I generated from operating activity. For that, anything non-cash and anything non-operating, I have to do some adjustment. Anything non-cash and anything non-operating, I have to do some adjustment. Okay. So depreciation I'm adding. Why I'm adding? Because it is a non-cash expenses. So I am adding. It is an operating expenses, but it is a non-cash expenses. There is no cash outflow. So I am adding. Then what about the next item? Interest paid. Interest paid is a cash expenses or not a non-cash expenses? Interest paid is a cash expenses only. But whether it is an operating expenses, non-operating expenses. Interest paid will come under which category? When I will pay interest. When I borrow, I will pay interest. When I got a loan, I will pay interest. Got it or not? When I will pay interest? When I borrow, I will pay interest. When I got a loan, I will pay interest. Borrowing or getting loan is which activity? Arrangement of funds is which activity? Arranging financing is which activity? It's an financing activity. So this interest paid is not an operating activity, it is a financing activity. So this is an expense, but that does not belong to operating activity. So I already reduced from my profit. Net profit is arrived final figure. I am already reduced from my profit. So I am adding now. Why I am adding? Because this is not related to operating activity. And this is an expenses already debited. So I am adding to my profit. If I add to my profit, I will get my cash. What is my cash profit? I will get it. Then what about the next one? Foreign exchange loss. Assuming this is book loss. Book loss is generally simply we are debiting our P&L account. Remember our AS 11 Forex class. On that we discussed during the balance sheet, during the reporting date, during the balance sheet date, monetary items should be accounted by applying closing rate. Monetary items should be accounted by applying closing rate of dollar. During such case, you will get loss, means you have to debit our P&L account. Okay, that is not a cash loss, that is a book loss. So I am adding. Assume simply it is a book loss, it is not a cash loss. So I am adding with my profit. If I add, what will happen? I will get the cash profit. Net profit is based on accrual method. I am converting into cash method now by adding the figures. Loss on sale of fixed assets. Non-cash loss and non-operating loss also. Non-cash loss. It is a non-cash loss. So I am adding back. Non-cash loss. So I am adding back. Then I will get the cash profit. Net profit is already reduced. Net profit is the final figure, is the opening balance here. Net profit as per our example is the final figure, but it is the opening balance. So I am adding all the items. Like this. I completed the non-cash expenses and non-operating expenses. Come to non-cash income and non-operating income. Add the expenses, deduct the income. Okay. Adjustment for non-current and non-operating item. You simply read it as non-cash. It is not non-current, it is non-cash. Now adjustment for non-cash and non-operating item. What is the first item? Interest earned. Interest earned is an operating income or non-operating income? Interest earned is an operating income or non-operating income? It is non-operating income. And also interest earned, interest received, both are different thing. Interest earned, interest received, both are different thing actually. Interest earned is what is accounted in P&L account. Interest received is actually what you received as a cash. Both are different thing. Okay. Here we are adding only interest earned. Why? Because this is only accounted in P&L account. What is accounted in P&L account, that only we have to account. That only we have to reverse now. That only we have to list now. You got it on what I am saying? What is accounted in P&L account, that only we have to give effect. Interest earned is an which activity? When you will receive interest, when you will earn interest, If you invest, then only you will earn interest, correct? If you invest, which activity? It is an investment activity. It is non-operating activity. It is an investment activity. So eliminated from here. So net profit, in net profit already this income is included. In net profit, this income is already included. So I am eliminating now. To know the actual cash operating profit, I am eliminating I am eliminating the non-operating cash items. I am eliminating the non-operating cash income items. Okay. So dividend earned is in which activity? When I will receive dividend? If I invest only, then only I will receive dividend, correct? So dividend earned is not an operating activity, it is an investment activity. So this income should be reduced from your P&L account. This income should be reduced from your net profit. So I am reducing. Then what about the next one? Profit on sale of fixed assets on the investment. When I will get this sale, profit on sale? When I will get this? Whenever I am selling the asset and investment. Asset and investment, which activity? It is an investment activity. Then we have to present there. So we have to reduce from here. We have to reduce from the here. This net profit, already this profit is included. So I am reducing now. So then you will get the next thing, operating profit before working capital change. Operating profit before working capital change. This is for your debtors and creditors actually. Debtors and creditors also we have to do some adjustment. What they are doing? Add increase in current liability, decrease in current asset. Add increase in current liability, decrease in current asset. How to identify what is this add increase in current liability, decrease in current asset? They will give 2 years balance sheet, first year, second year. You have to compare both the years. Then we have to see the difference. If the difference is increased, then we have to do accordingly. For example, assume decrease in current asset should be added. Why it is added? For example, take debtors. Previous year debtors is 200 rupees. Previous year debtors is 200 rupees. Present year closing balance. Present year closing balance it is 100 rupees. Previous year debtors is 200 rupees. Present year it is only 100 rupees. What is the meaning? Previous year debtors is 200. This year only it is 100. Closing balance is 100. Previous year closing balance is 200. This year closing balance it is 100. What is the difference? 200 previous year. This year how much? 100 only. Whether increase or decrease? Decrease in current asset. Because previous year it is 200 but this year only 100. 100 rupees is decreased. Why I am adding this decrease? Previous year 200 rupees I have to collect. Debtor means what? I have to collect 200 rupees from my debtors. But this year my closing balance is 100 only. What is the meaning? Meaning out of 200 I collected 100 rupees. Out of 200 I collected 100 rupees during the year. So that's why my debtors from 200 it becomes 100 now. My debtors 200 it becomes 100 now. So that is the reason why I am adding. Because my cash is increased. I got 100 rupees in my hand now. I collected from my debtors. Collection from my customer. My cash is increased. My debtors is decreased. So I am adding. Because my cash is increased, because of my debtors decreased, my cash is increased. So I am adding. Like this you have to think in a reverse way. Like this you have to think in a reverse way. Less in increase in current asset. Less. Why increase in current asset? Less. Previous year debtors 100 rupees. This year debtors 200 rupees. Previous year debtors 100 rupees. This year debtors 200 rupees. Increase or decrease? How much increased? 100 rupees increase. Because previous year it is 100 rupees only. This year it is 200 rupees. What is the meaning? I have not collected 100 rupees from my customer. So my cash will decrease for that 100 rupees. That is the meaning. So I am reducing. Like this decrease in current liability. Decrease in current liability is deducted. Why? Assume sundry creditors. Previous year sundry creditors balance is 200 rupees. This year sundry creditors balance is 100 rupees. What is the meaning? Previous year sundry creditor balance is 200 rupees. This year sundry creditor balance is 100 rupees. What is the meaning? Decrease or increase? Decrease. Previous year 200, this year 100 only. 100 is decreased. Why it is decreased? Because sundry creditors previous year 200, this year 100, meaning balance 100 rupees I repaid. Balance 100 rupees I repaid. I repaid means my cash balance is reduced. That's why I am reducing. Okay, minus, and that's why I am minusing. Then I will get the cash generated from operation. Then I have to less income tax paid, not payable. Income tax paid, actually how much I paid?
that we have to reduce. Then add proceeds from any disaster settlement, add proceeds from any disaster, then you will get the net cash flow from operating activity, net cash flow from operating activity. For cash flow from investment activity and financing activity, same meaning. Whatever we discussed in direct method, the same thing will come under the indirect method. Thing is, investment activity, financing activity is already in cash method, is already presented in cash method, but indirect method, only this operating activity, we are converting from accrual to cash. That is, indirectly we are converting from accrual to cash. That is why indirect method, net profit is calculated under the accrual method. Net profit is calculated under the accrual method. Then we are doing all this adjustment. Then we are bringing under the cash method. Then we are doing, after doing all this adjustment, it will come under the cash method. Okay. So this is the logic. This is the logic actually. We will solve the problems. Before that, you all of you please go through all this explanation first, and I request you to write this format one time. Indirect method format in your notebook, you please write one time. Then we will discuss the problem. Okay. Then we will discuss the problem. Okay.